Well, you might have seen Canadian growth fell sharply in the second quarter, but of course it did. Most economies are still experiencing sizable distortions to the trade war.
Yeah,
Business sentiment was down. Is that a big surprise? And trade data is continuing to produce some very big dislocations globally. So, no,
right.
not a big surprise. What's more of a surprise with Canada is I think on heading into year end, we're going to see some sizable improvements in the Canada story.
Later Q3 into Q4, what part of our economy should our listeners and viewers study? Is it consumption? Is it investment? Something different?
I actually have been surprised how different my own economic presentations have been for clients as we think about where is the US economy. It's been so interesting to me that almost all of the conversations I have are about these big structural trends that are hitting the US and appear to be hitting them in real time. For example, I'm not often asked, what is your non-farm payrolls forecast for next Friday? But what is really happening with the supply side of labor? Are we going to see a labor shortage? I no longer get asked, what specifically, when is the US debt story going to blow up? But what are the implications of high rates on the long side? What are the implications of fiscal policy now maybe dominating monetary policy? And of course, a topic we have talked about
Yeah.
many times is, have we really internalized the idea of that K-shaped economy and the institutionalization of high income Americans just living on a very different economic cycle than low income Americans? And all these themes together, Tom, have effectively meant that
Mm-hmm.
yes, there's a cyclical economy and we have to pay attention to it, but we're at this nexus between the cyclical economy and the structural economy. And right now in the second half of the year, I think we're going to see a lot of these themes come head to head.
Francis, we've seen this weaker dollar narrative play out, yet, we aren't seeing capital flows into foreign markets out of the U.S. here. I'm curious, if the dollar continues to weaken, or even if it recovers for that matter, what's the story for capital flows? Is there any potential for flows to, I'm talking, when I say capital flows, obviously, I'm talking FDI and portfolio flows. What's the extent to which you can see that sort of, happen?
Yeah, I think you're getting to the core of is the US exceptionalism story still in play? And as Tom noted earlier, we still have some big hits to growth happening outside the United States. What I'm watching for in the US is, are we going to see the productivity start to pick up in a way where American exceptionalism can be reflected in strong capex, strong business development, and really seeing those productivity numbers start to rise? I think underlying this whole story is this one big US issue, which is the United States going to see big impacts from tariffs? And that is the outstanding elephant in the room for the American economy. And the global investors have to get over that hump and have more clarity on that before we can call one way or the other, is capital flow going to return meaningfully to the United States?
So, what's your sum 12 months forward, nominal and real GDP? To me, it's a huge mystery.
So we have what we call a stagflation light type of outlook, which is growth that is uncomfortably low but not collapsing. So that's between 1% and 2%, Tom. The problem is the inflation side of this
Yeah.
picture, which is that we continue to see above 2% inflation, and getting as high in the next 6 months as 3.4 on both the CPI and the PCI number. So you're seeing this phenomenal tension in the US economy. And what worries me about it is that it's not particularly aggressive. It's not pandemic level inflation that calls for a
Right.
very clear policy response. It's a very nefarious, uncomfortable, muddle through type of environment. And this, I think, is going to continue to dominate a lot of the conversations and make it difficult to say
Right.
we're early, mid, or late cycle. When you say it's difficult to see, what I hear is that this way of thinking about the economy as being in a business cycle is getting substantially distorted by
Right.
tariffs, by inequalities, by government spending. And so reading that story is more difficult.